Good afternoon, everybody. It's Monday, June 21st, and we just had the first day of the week trading, and it was an interesting day. Had a market gap up on the news that the Chinese were no longer going to be manipulating their currency, and the market's gapped up big, and then we sold off on light volume through most of the day. And at the end of the day, we got some panic, and we closed the day down a little bit. All three indexes, a little more. In the Nasdaq, we were down 20.7 points or 0.89%. The S&P was only down 4.31 or 0.38%, and the Dow was only down 8.22 points, not even 1/10%. So it was a very interesting day, and we hit some key resistance levels, and we sold off. And like I said, I was holding my put position in the SPY as long as we held the 45, held under the 45 and the 100, which had the death cross recently, and as long as we closed below that, I was holding on to my position, and we did that. So the positions look good, and I'm going to go over some of these charts. So the first chart I'm going to look at is the dollar sign SPX chart, and you can clearly see here the downtrend line from this downtrend, and you have the uptrend line right here from this bounce that we had off of the 1040 lows. And basically we tested the downtrend line, tried to go above it. We tested the uptrend line, and we held. So for right now, the market is in a holding pattern, basically neither bullish or bearish at this point. I mean, I think that the market's going to be heading down. As you see here, we touched the 45-day moving average at 11. Well, actually, we were a little above it at 11:31.23 was the high today. 45 is 11:30.40, and you see the death cross right here, which is the red line crossing the green line to the downside. That hasn't happened in quite a long time, actually, throughout this whole rally. So that's pretty interesting development. Just listening to that Muse song. It's a good song. But so anyway, we'd like to see that uptrend line get taken out to the downside, and I think the next area of support is going to be this 18-day moving average, which is around the 1090 level, 1089.45, and it's working its way up. I think we will get a break and test that. As you see here on the MACD histogram, we have a bearish triple P pattern. I believe that's what it's called. The MACD is still trending up. The stochastic, we had a cross with the black over the red, but we're still above 80. We're at 90 and 94. So if we go up tomorrow, there's a good chance that this market embeds. So tomorrow is going to be a very big day. Next chart. Next chart I will be looking at is the volatility index chart, the VIX, dollar sign VIX. And the VIX was in this bullish falling wedge pattern, you can see here, and we closed outside of that. So we broke out of the bullish falling wedge to the upside, and it looks like it resolved itself exactly at the apex right here. So this pattern is playing out, and over here we have the same thing, the bullish triple P pattern, and you'll have it confirmed with a close above today's highs at 25.64. Stochastic is still very low at 6 and 3, and the MACD, the histogram is ticking up now. At least you have that. So you look for some follow through tomorrow. Going to also look at the hourlies on this chart so we can get a better feel for tomorrow's trading. I mentioned about that specifically the VIX, and the other chart that I was also talking about, I mentioned about the dollar bouncing. I thought we were near near-term bottom, and as you see here, we had a pretty nice up day, up 0.37 or 0.43% after being down and found support at the red line, which is the 45-day moving average at 85.07. We hit 85.01. You got the stochastic is turning up now. You still very oversold, 11.7 reading, and the histogram is also ticking up here. So you want to see this turn up and make a run for new highs. And the dollar also has some interesting things to look at on the monthly chart here. This is actually a 20-year monthly chart of the dollar, and we're at a very crucial point here. As you see here, we tested the 2009, early 2009 highs. We almost got up there, and it's roughly it's in the 89 area, and the high for this month is actually 88.71, so we're pretty close. Now, depending on how this month closes out, we still have another 5 or 6 trading sessions for the month. The dollar could put in a white candle, or it could put in a red candle. If it puts in a white candle, there's a good chance we close above this 100 period moving average, and we haven't done that for since 2003. If you look back in this chart. So that's when they started printing a lot of money, and the housing bubble was created. So basically, the dollar is threatening to close above that for the first time in 7 years. You have the MACD is above 0, and you have a cross. The histogram is still ticking up. So I mean, if you have another positive month here, there's a good chance we're going to break this 89 level, and then you're talking about a target, a long-term target of around 105 on a dollar. Now, if you have a dollar that's at 105, and being the inverse relationship between the dollar and the stock market, you could have quite a sell-off coming in the near future. Just the opposite of what the majority of people are saying, which would be a crashing dollar and hyperinflation or inflation. So basically, keep that in mind this next week or so. I mean, if this candle turns up, this could be one of the biggest charts you'll look at. And that's why it's good to always look at these intermediate, short-term, and long-term charts. I'm also going to pull up the weekly chart on the dollar. Let's do a shorter time frame on this. Let me get the right chart up here for. Give me a minute or so. Yes, always try to look at as many time frames as you can, because sometimes it'll sway your opinion one way or the other. Okay, now here is the 3-year weekly on the dollar. And as you see right here, we came up to this level. You have a potential, I guess a double top. The stochastic is turning down. It's below 80. The histogram has also been ticking down. But for this week so far, we have a bullish white candle. And basically, if this dollar can reverse in here, it's going to possibly re-embed the stochastic here above 80, and also the monthly will close out strong. Like I said, that 20-year monthly chart, and you could be signaling a break of that big resistance in the 89 area, and that would probably coincide with a big market sell-off. Okay, everyone, this is going to be part 1. I'm going to do another video in a few minutes.